Hello traders and investors, welcome back to the Trend Trader channel. So the last two videos we were looking at the companies that would be paying dividends from the JSE, but for the last week there weren't too many exciting news, especially news regarding dividends. So if you are still looking for those companies that can pay dividends, make sure that you revisit our two recent videos, because that is where you're going to find that information, especially the last trading days to participate in the dividends. So that will be the right space to look at in order to find those companies. For this week, we're gonna be switching up things a bit. We'll be looking at the US companies. So some of these companies, they are either listed in the Nasdaq or they are listed in the New York Security Exchange. And then before we proceed, I would like to ask those who haven't subscribed to please consider subscribing and make sure that you smash a like in this video. And if you have any comments or suggestions, we always read the comments and we respond to the comments. So to begin, we are looking at the S&P 500. Remember, the S&P 500 is the top 500 companies in the US. So what we see here, we've already plotted this thing. We see this nice pattern. This pattern is called a cup and handle pattern, because you can see it does look like a cup, but the important part in the cup and handle is looking at the handle itself. So what we want to do, we want to buy the S&P 500 as soon as it break out above this handle side of this thing. It does not necessarily need to break out from the cup side, but it has to break out on the handle side. So this is an S&P 500. So there are ways to participate in that S&P 500, but before we look at those ways, let us look at the Nasdaq to see what do we see from Nasdaq. So now looking at Nasdaq, we also see a similar pattern. It does look like a cup and handle, but also for other people this can also look like a bull flag. We saw that there was that breakout there. So I think with hindsight, that was a decent entry level to buy this Nasdaq at that time. However, if you missed it like we missed it, then you can also look for other opportunities elsewhere. As you can see here, there's this sort of resistance level. So we saw that there is a breakout at that resistance level. So again, the Nasdaq is still near that breakout level, so we can consider buying the Nasdaq there and then setting a stop loss just below that consolidation area there to ensure that we manage our risk properly. Remember, in this channel, one thing that we always emphasize is good risk management. But in a nutshell, we can see both the S&P 500 and the Nasdaq, they are forming what looks like a bullish continuation patterns. Therefore, we expect the S&P 500 and the Nasdaq to continue to move up. Like I said, not everyone is able to buy these futures. So the alternative for the S&P 500 is to buy the SPY ETF. We have a video where we have spoken about this SPDR, S&P 500 ETF, but you can also use any S&P 500 tracking ETF. Those that are priced in US dollars, they will have the similar chart. If you buy them in your tax-free savings account, especially for people in South Africa, chances are you will find an ETF that tracks S&P 500, but it is priced in rands. Therefore, the chart or the price action may not look similar. But since those ETFs, they are tracking the S&P 500, we also expect them to perform in a similar way, even though the chart pattern might not look the same. So for the S&P 500, you can consider buying the SPY. There's a VOO ETF. For those people that want to pay more attention on the total expense ratio, you can also look at the total expense ratio and buy those ETFs that are available to you with minimal fees. And then for the Nasdaq, there is also a QQQ or this ETF. It also tracks the Nasdaq market. Again, you can see the chart pattern. It looks the same. It is also priced in US dollars. For those that are available in South Africa, the ETFs, they will be priced in the local currency, which is the rand. Again, the price action may not look the same. So yes, for S&P 500 and Nasdaq, we expect those markets to continue to go up, and then there are different ways that you can track them. And then now let us look at this stock, Apple. We know Apple, most of the time we are invested in the stock. Sometimes it goes up, sometimes it goes sideways. It is what it is. It is something that you always see in the market. So there was a time where we were buying Apple as it was going up before it started to consolidate. We can see here it started to reject those lower prices. We had a position where we bought. We wanted to participate in a move. We were targeting that previous high in there. So we held that position until Apple started to consolidate in here, and then we exited our position prematurely, because now, as you can see, the stock did eventually reach our target, but that is all in the past. Money was made. So now what we're looking for here with Apple, we want to see the price breaking above this level, and then we can expect Apple to continue to trade higher up there. We already have a buy stop order for this particular company, and as always, we always have a stop loss. So our stop loss is going to be somewhere around this low. We're not saying that Apple is going to go up, but if Apple does go up, we want to be in that position and then to participate in that move. So for Apple, we are just looking purely on price action. And then lastly, the other stock that we want to look at, but before we look at that stock, we're just going to look at the financial breakdown, because they recently reported their earnings result, their quarterly earnings result. So that company is Broadcom. It's a tech company. They are in the semiconductor business. So you can see the breakdown, the information that you can follow this account on Twitter, App Economy Insight. Then you can see these nice images, but this is just the income statement. They broke it down into this nice image, and we find it useful. So the most important thing when we look at the financial statement or the income statement, yes, we want to look at the revenue, because this is the money that the business generated. So any business is in the business of making money. So we want to see if the business is indeed making money. So we can see Broadcom had a revenue of 9.3 billion. If they compare year on year, it's an increase of just about 4%. So 4% is not a big amount of change, but in terms of revenue, we can see it's a 9.3 billion revenue. And then we want to look at the net profit, because you can look at all those things, the gross profit, the operating profit. Yes, it's important that the business at the end has an operating profit, because then they are able to pay tax. We always advocate for companies to pay tax, because there's a lot that governments can do with tax money, but the key thing that you want to focus on is profit, because after subtracting the the cost of revenue from the revenue itself, instead of ending up with a gross profit, it's possible that you can end up with a gross loss. Once there is a gross loss, everything that follows here is just a loss. So we can say a nice operating profit of 4.2 billion. Again, in terms of year on year, it's just they say 1 pp. I think that's just about a percentage or so, but in margin terms, it's a 46% margin. And then finally, the net profit, it's a profit of 3.5 billion. Remember, when you invest, among other things that you expect to receive from your position is a dividend. So if a company has a net profit, then that company is in a position to pay a dividend. But if it's a net loss, then they can't pay dividend if they don't make money. So it's important that, among other things, you focus on those companies that have or that are profitable, because that is where there is a possibility of receiving a dividend. So based on this, we are happy with these numbers. I mean, there's not so much that we can say with regards to these numbers. What is important, we can see the business is making money, and then it results with a net profit. So based on this, we are happy. In this image, there is no information about the earnings per share in the image itself, but if you look at the Twitter there, at the tweet itself, you can see that there is the non-GAAP EPS of $11 per share. Remember, when you are a shareholder, your share is making you money. So the earnings per share is how much money each share you own is making you. So in this case, each share earned about $11.06 or so. So this is good. We are happy. Again, if it's a net loss, then it's going to be negative earnings per share, because your share, it means that it did not make you money. So this is good. We are happy with these numbers. We are not the kind of people that want to make projections of what will happen in future, but the company itself, it seems like they have given a guidance. So you can see now in terms of guidance, they're expecting to make a revenue of 50 billion. Well, we will see if that they are going to achieve that, but that is not our problem. We are not interested in the future. We're looking at the past. And then in terms of future, where we're looking at, we are looking at the chart. So now we are looking at the chart of Broadcom. In terms of dollar terms, Broadcom is not cheap. As you can see, the price is $944. But previously we shared a tweet where we bought Broadcom when it broke above this resistance level. As you can see, at the time it was trading just below $650. It was expensive back then, but the stock managed to rise all the way to just shy of $1,000. I think it went up to about $970-980. But that is all in the past. Again, we can see we plotted this support and resistance. We have a video where we shown that we're always looking for those companies that are consolidating, and then we buy as soon as they break out of that consolidation level. So it is the same thing that we did with Broadcom. We bought when it broke above this $920-ish. But as you can see, we've mentioned in the past that there can be a breakout, a retest of a breakout, and then the stock continues. So this is what we see here. There was the breakout, a bit of resistance. It came back to retest the previous breakout level. So now what we're looking for with this particular stock, we want to see if it can come back to this resistance level and ultimately breaking above this level. So once the stock comes back to this level and then it break above this level, then we are going to take a long position. And like we always say, we always put a stop loss. So our stop loss is just going to be below that breakout level. In this case, our stop loss is just gonna be somewhere in here. Okay, in this case, we are looking at that breakout level at the top. So our stop loss is just going to be just below this level in there. We are not saying that Broadcom is going to go up. We are just saying if Broadcom does go up, we are definitely going to take that long position. So that's it that I wanted to share with you today. The S&P 500, Nasdaq, those ETFs, then the Apple chart, and then just a brief summary of that Broadcom result, and then looking at the chart, because now since we have the result from Broadcom, we would like to see if those are going to be a positive catalyst that can help to push the price further up, and if it does, how are we going to participate in that stock to try and make money from it. So that's it for this video. If you found value in it, please make sure that you subscribe if you haven't subscribed. If you have already subscribed, don't touch the subscribe button, just leave it as it is if you have already subscribed. But if you haven't, please subscribe, like this video, share it, comment if you have any questions or suggestions, and then that's it. We will see you in the next video.